Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 14th, 2025, we are diving into the fascinating world of EURUSD, exploring both recent news and crucial chart data that could dictate its next big move. Let's begin by looking at the current economic landscape. The headline news impacting EURUSD today is the hotter-than-expected U.S. Producer Price Index, or PPI, which rose a significant 0.9% in July, following a flat reading in June. On an unadjusted basis, the PPI advanced 3.3% for the 12 months ending in July, painting a clear picture of persistent inflation. This scorching PPI data has largely killed hopes for aggressive Federal Reserve interest rate cuts, leading to a growing, higher-for-longer sentiment. Such an outlook typically strengthens the US dollar, putting pressure on pairs like EURUSD. Adding to the euro's woes, recent reports indicate that EU economic growth has slowed to a mere 0.2% in the second quarter, further highlighting divergence in economic performance between the two blocs. While we see some conflicting news snippets about the euro to US dollar rising, the prevailing narrative from today's reports firmly points towards dollar strength. In fact, latest reports indicate the euro to US dollar exchange rate has already fallen to 1.1651 today, down 0.53% from the previous session's close. Now, let's turn our attention to the charts, starting with the long-term view on the one-day time frame. Observing the daily chart from April 2024, we can see a significant upward trend that began around the 1.04 region in late 2024, rallying strongly into mid-2025. This overall bullish momentum has been quite robust over the past several months, despite occasional pullbacks. However, the latest daily candle from August 13, 2025, closed at 1.17116, near its recent highs. Today's news, however, indicates a sharp reversal, with price already dropping to 1.1651. This suggests a strong bearish reaction to the PPI data, breaking below key short-term support established over the last few days. Historically, strong support levels have been found around 1.14 to 1.145, which held firm in April and May 2025, and further down at the 1.10 and 1.04 to 1.05 zones. Let's zoom into the shorter time frame to see the immediate price action leading up to this point, specifically on the 15-minute chart from August 10th to August 13th. As you can see, in the days leading up to today's news, EURUSD had been consolidating, ranging generally between 1.16 and 1.17. The price managed to hold above the 1.165 area for much of this period, with the August 13th session closing near its intraday high. This recent consolidation, followed by a slight upward bias into yesterday's close, contrasts sharply with the immediate bearish reaction reported today. This highlights the power of fundamental news to override short-term technical patterns. The volume on the 15-minute chart, particularly in the later hours of August 13th, was relatively low, indicating a quiet market before the major news hit. This suggests that the sharp drop seen today on August 14th is likely a direct result of the U.S. PPI data and associated Fed expectations, catching many off guard. The break below the 1.165 level is a significant technical development for intraday traders. So, what does this all mean for the short and long term, and where do we identify key price levels? For the bearish case, the strong U.S. PPI data, the higher-for-longer interest rate narrative from the Fed, and the slowing EU economic growth all weigh heavily on EURUSD. The fact that the price has already dipped to 1.1651 today, breaking below recent short-term support, reinforces this immediate bearish sentiment. If EURUSD fails to reclaim 1.165 quickly, we could see further downside targeting the 1.158 to 1.16 zone. A break below 1.158 could open the path to the significant daily support level around 1.14. On the bullish side, while the immediate reaction is negative, the long-term daily chart still shows an underlying uptrend from 2024 lows. A quick rebound back above 1.17, perhaps on weaker-than-expected U.S. data later or stronger Eurozone figures, could invalidate the current bearish momentum. However, at this moment, the bullish argument faces strong headwinds from macroeconomic data. Key resistance levels to watch on any rebound would be 1.168, then 1.171, and eventually the 1.175 region. For traders, the immediate focus is on whether EURUSD can hold above the 1.164 to 1.165 level. A sustained close below 1.164 would signal a continuation of the bearish trend, making the 1.158 to 1.16 range the next potential support zone. Conversely, a rapid move back above 1.168 could suggest a false breakdown, offering a potential long entry for aggressive traders. Keep an eye on upcoming economic indicators from both the US and Eurozone, especially any statements from central bank officials, as these will heavily influence future price action. In recap, the immediate outlook for EURUSD on August 14, 2025, is bearish, driven by strong US PPI data and a hawkish Fed outlook. The price is currently around 1.1651, a significant drop from yesterday's close. The likelihood of further decline is high if 1.164 to 1.165 fails to hold, with targets around 1.158 and potentially 1.14. For the bullish scenario to reassert itself, a strong fundamental catalyst or a rapid reclaim of the 1.17 level would be necessary. Conditions that would reinforce a bearish move include continued strong US economic data or any further hawkish comments from the Fed. Conversely, weaker US jobs or inflation data, or any signs of stronger Eurozone recovery, could provide a bullish catalyst. Always remember to manage your risk and stay updated on the latest news. Thank you for watching Explain the Charts, and we'll see you in the next one.